the average Disney World parking lot attendant gets more training than the average enterprise sales rep. And I think that's true. I think it's mathematically true.
If someone isn't asking for help, what does that signal to you?
There's this quote that I like, a closed door only invites further scrutiny. And I think that's true when it comes to C-suite teams. Like if everything is perfectly okay, nothing is perfectly okay in any business, at any stage, at any growth rate, at any level of quality. So I think a lot about the difference between being smart and being useful in this job, especially early in an investment. And I try damn hard to be useful as early as possible so I can earn the right to come up with smart ideas.
You have this quote, you can't fix a secret. What does that mean?
Yeah, we don't like secrets. Like we like problems because problems are fixable. Secrets are not fixable.
Is this thing on?
Yesterday's price is not today's price.
Well, hey, hi, hello. Welcome back to the Run the Numbers podcast, where we are stepping into the operator side of private equity with Paul Stansik, operating partner at ParkerGale, a firm that not only writes checks, but rolls up its sleeves to help portfolio companies grow. So Paul doesn't just swoop in with a spreadsheet and some advice, helpful advice, adding value. He's actually the guy who will help your team turn data chaos into clarity. We start with the basics of what is portfolio ops and why is it increasingly the secret weapon in private equity. Paul shares how his team helps companies answer the deceptively simple questions: what do we sell, to whom, and how well is that actually working? We dig into why so many go-to-market teams struggle when the data asks start piling up post-acquisition, and what the PE firms often get wrong about that process. Paul explains the difference between being data-aware versus data-driven, and why the best dashboards aren't lists of KPIs. They're just answers to the questions that drive decisions. He goes deep on sales leadership. This guy knows his go-to-market stuff, how to hire for the right stage of growth, why playbooks are often overrated, and why most sales reps are handed a phone and a machete and told to go figure it out. Next time I have to hire SVP of sales, a CRO, I'm calling Paul. Paul unpacks what great sales cadence looks like, what makes a good budget stick, and why you can't fix a secret. What a line. That might be one of the most important lessons of all. If you've ever filled out one of those annoying PE data collection templates or had a spreadsheet-induced crisis based on a obscure data ask, I'm just kidding, Paul, or just want to build a better growth engine, this one's for you. Paul has advice for days and writes the very helpful Hello Operator Substack. All this and much, much more after a short word from our sponsors. If you're a CFO trying to keep up with usage-based billing, complex contracts, and a finance team drowning in spreadsheets, listen up. Meet Tabs. Tabs is the AI-native platform automating contract to revenue for finance teams that are scaling fast. Whether you're selling custom terms, usage-based pricing, or a mix of PLG and sales-led, been there, Tabs turns month-end chaos into clean cash flow. It's like having a controller that never sleeps and a billing analyst who actually understands your pricing model. No more manual reconciliations, no more late-night close deadlines, just clean data from contract to cash. It used to drive me nuts that we do all the work to close the books inside our ERP in our FP&A tool, and then we had to export the most important part, revenue, to this janky spreadsheet and manually calculate what we did that period. And don't even get me started on the back of the envelope calcs we did to get to ARR based on all the unique contract terms we had floating around. Our investors would wince if they knew. Let's be honest, legacy systems here are not going to cut it, folks. Tabs is the system I wish I had in my CFO days. Fast-growing companies like Cortex, StatSig, Cursor, and others are already using Tabs to instantly generate invoices from any contract, automate RevRec, cash application, and get finance out of manual mode. If you want to automate the mess and fix the way money enters the building, baby, go check out tabs.inc/metrics. Again, that is tabs.inc/metrics. And if your team's still closing the books like it's 2015, now's a good time to upgrade. Hey, metrics fans, let me ask you something. Do you know what keeps CFOs and finance teams up at night? Well, it's not the complex analyses or forecasting models. It's the mind-numbing tasks of chasing receipts, reconciling expenses, and juggling 5 different systems just to track company spending. I was talking with a finance leader last week who calculated her team was spending an astonishing 20 hours weekly just on expense administration. That's nearly 1,000 hours annually on low-value tasks. That's why I'm excited to tell you about Rippling Spend. Rippling Spend is the only platform that automatically handles your entire company's spending in one unified system. What makes it different? It's built on Rippling's workforce platform. So when org changes happen, like someone getting promoted or changing departments, all approval workflows, access permissions, and policies update automatically. Picture this. When your marketing director goes on vacation, expense approvals don't sit in their inbox waiting for their return. Instead, they're automatically routed to the right backup approver. No manual delegation needed. Meanwhile, your finance team gets real-time visibility into all company spending with no more month-end surprises. As a Run the Numbers listener, you can get an exclusive demo showing exactly how much time your org would save. Just visit rippling.com/metrics to learn more. That's rippling.com/metrics. Do it, guys. As a CFO, you're expected to bring clarity to everything, including how your company manages ownership. The tools you use should make that easier, not harder. But when they come with hidden fees, data you can't always trust, and support you can't rely on, you end up with more frustration than clarity. That's where Pulley comes in. Pulley is the cap table management platform built for finance leaders who need accurate, decision-ready data from a system that works for your business, not against it. With Pulley, you get intuitive workflows, audit-ready reporting, and support you can count on, all backed by predictable pricing you can plan around, so you can stay compliant and make smarter decisions about your company's future. Manage everything from fundraise modeling to ASC 718 reporting to custom liquidity programs, all on one trusted platform. Hundreds of high-growth companies like Linear, Fathom, and Runway trust Pulley to help turn ownership into a strategic advantage, and joining them is now easier than ever. You can switch to Pulley in as little as 5 days. And for a limited time, they're offering 25% off your first year. To claim your exclusive offer, visit pulley.com/mostlymetrics. That is pulley.com/mostlymetrics. Pulley.com/mostlymetrics. Here's a question. When was the last time you really had time to focus on growth and not chasing contract renewals, tracking shadow IT spend, or explaining rising software costs to the board? Yikes! The truth is, traditional spend management is broken. If you're still piecing together data from 5 different systems just to figure out what you're actually spending, while vendors keep on pushing those auto renewals and price hikes, my friend, I got a solution for you. That's where Tropic comes in. Tropic is an intelligent spend management solution that consolidates your spend data and processes into one unified offering, enabling insights and decisive action. It doesn't just show you where the problems are, it helps you solve them. From spotting hidden optimization opportunities like duplicative spend, to automating those painful procurement workflows, to giving you the best market data that turns every vendor negotiation in your favor. Tropic combines smart insights with real human expertise to keep you ahead of the curve. And I can say firsthand because I've used them for over 2 years. Their SaaS platform helps me with price checks. It helps me keep my calendar organized of when renewals are coming up and I can actually visualize it. And let me say, it saves me more than 10 hours a week on vendor management, and we've saved a ton on renewals. I'm walking into the boardroom with a lot more confidence. Isn't it time to turn your spend management into your competitive advantage? Visit tropicapp.io/mostlymetrics. That's tropicapp.io/mostlymetrics. Paul, welcome to the Run the Numbers podcast.
Thanks for having me.
This is a first for the audience. We've never had a professional lacrosse player on.
Oh man, there's not that many of us. The league has struggled to expand over the decades, but you know, that was a long time ago, washed up at this point.
What position were you playing?
Whatever coach told me. I was the last guy on the roster, so I was a defenseman, long stick midi, took my first face-off in the pros, which was weird because I feel like we were just trying to figure out what worked, but that was a long time ago, man. I got a different job now.
How long was the hair back then?
Kind of the same thing. I don't have the infrastructure for the central casting flow. I've got the Eastern European straight locks that kind of just go out to the side versus, back. But a guy can dream, maybe someday.
Grip it and rip it. Well, now you're at ParkerGale. You've made quite the career for yourself. And we've actually never had somebody on who works in portfolio operations. So we've had a lot of people from the investing side tell us about like what they think about from an investment thesis. But I don't think there's enough out there on like when the rubber hits the road, you actually have to make sure this company is successful. And so maybe you can just start off with like maybe ParkerGale, where you work, and then we can get into like the meat of like what you do day to day.
Yeah, so we're a private equity fund headquartered in the West Loop of Chicago, and we buy B2B software companies from founders. And we're most focused on businesses where there's a strong foundation. So we're not venture capital guys, we're not growth equity guys, we're buyout guys. And we're looking for businesses that have been around for a while, where the founder wants to get from where they are to where they want to go. They want some help getting there, and they have a great product that not enough people know about. That's the classic ParkerGale investment.
And the founder, do they usually stick around, or are you also a liquidity solution for them?
We've done both. Sometimes we will talk about ourselves as the exit for the founder. I mean, the classic investment for us has been someone who started a business scratching their own itch in the 90s or 2000s. They've run it for 20 years. It's kind of the classic Adam Davidson passion economy business. It's got some great retention, strong NPS, but not enough people out there in the market have heard of it. And in a lot of cases, the founder is getting into their 50s, 60s, or 70s, and they want to hang out with the grandkids or do the next thing, but they're looking for someone who's going to do right by what they've built and where they want to take it. And that's when they call us.
Got it. Is there, and maybe this is a weird question, but are there any analogs to like a Constellation software?
Yeah, I think the real analog is there's a lot of these businesses out there, right? And so software has grown. I think when you read the trade publications and you look at the news, the ones that get a lot of attention are the big guys, the big publicly traded software companies.
Yeah.
But we've done the research to show there's tens of thousands of these businesses in the range of $0 to $30 million. And there's a lot of great ones, and there's a lot of products that stick around and do really important jobs for customers. They don't get the credit they deserve, but those are the ones that we like to work with.
Got it. And so portfolio ops, I looked it up in the dictionary. I'm pretty sure you're the guy who makes me fill in the annoying template. Is that correct?
Occasionally there are templates involved. I like to say that templates build trust, and we can talk about what that
Damn,
means.
that's a hitter right there. Templates build trust in the first 3 minutes. Okay.
Yeah, but this is the weirdest job that I've ever loved, because it's really a lot of different jobs in one. And at its core, I mean, from the outside in, it looks a lot like a captive consulting company that works just on our businesses, you know, so I can rationalize my own career choices and just looking at my own calendar. Like, I think it's way more than that. The classic example is, hey, the ops team is here to make sure that you hit your numbers. That's part of it. We certainly look at, hey, what's the target in the budget and how do we get there and what's going to take us from here to there. But it's also about building great teams. It's helping a CEO think about what they need to do differently and how they need to go from level 1 and level 2 in the video game and what it's going to take to get there. But ultimately, the way I think about it is it's giving our teams leverage. And that could mean working on go-to-market. It could mean helping them get clarity on what's working and what's not, or just making sure that that leadership team, which I think of as the atomic unit of a private equity investment, those people are aligned and focused on the right thing. So ultimately, it's a weird but fun mix of coaching, problem solving, removing obstacles before they slow down a company that we're really excited about.
I think there's also this aspect of like, what does good look like? A lot of founder-led businesses, like they may have only worked for themselves forever. And if they haven't been at other companies, or if they've only been at like one or two and it was 20 years ago, they may not have like a good comp for like, what does great look like if we're good here?
Totally. And I said a minute ago, like, this is the weirdest job that I've ever loved. And, you know, it's not just because my parents still have a really hard time explaining what I do for a living when somebody asks them. Like, it is 4 jobs in one. And you mentioned one of the most important ones. I talk about it as being the keeper of the standard. So, like, you should have a very strong opinion of what works and what the foundational building blocks of a high-performing software company at this age and stage look like. So for me, it's about having a strong opinion on like what always seems to work in sales, in marketing, in strategy, in targeting, in territory building, and not being so arrogant to say like, we're going to do the same thing at every single company, but it's being prepared with what those building blocks are so that we can translate them effectively into the handwriting of what each business needs. So I know we're going to talk about like what we do with all of our companies. There are some consistent building blocks that kind of show up inside of every ParkerGale company. They do look different based on when we deploy them, how the CEO wants them to look, and just what the sense of fit needs to be with that product, that market, that team.
And just to clarify one thing before we do jump into that, do you only get involved if a company is underperforming?
No. I mean, everything in life follows a normal distribution, and at any given time, most people are doing just fine. There's a couple that are, reaching escape velocity, and there's always somebody running into an obstacle. So one of the biggest challenges in my job is figuring out how to allocate my time, because we have a number of majority investments. I think we're at 7 or 8 right now. And, you have to pick your spots. You can't spend 8 hours a day with every single one of our companies, or you'd run out of time very quickly. So I think the classic central casting idea that a lot of people have about an operating partner is you're the turnaround guy. So you only get called in when a business is missing its numbers, when they're behind on cash, when they're having a hard time. That isn't the case. And when I'm at my best, I think I'm spending more time with our businesses that are overperforming, because there's generally something that we can capitalize on in terms of a growth opportunity that might be worth more from an enterprise value perspective in the future than just getting something from missing its numbers to hitting its numbers, if that makes sense.
Yeah, I think of like the wolf from Pulp Fiction, like the guy who shows up to clean up after there's been like a murder or something. And I'm not saying that's what you are, but like there is this aspect of like, okay, how do we fix this here? And that does have like the overhang of like, is this a turnaround thing, or is this a like, how do we accelerate it?
Yeah, one of my friends who has the same job refers to this gig as being a white collar handyman, and I think there's some truth in that. But like, yeah, ultimately, we should have an idea in our mind of what good looks like, but you need to be humble and flexible enough to know that that's going to look different for every business. And then it's about creating agreements about, okay, what elements of that playbook are we going to deploy at this stage, a year from now, 2 years from now, based on the appetite for the team, what the business needs, what the value creation plan looks like. So that idea of having the playbook in your head and written down to some extent, but also having the mindset of being a bit of like a strategic diplomat and being willing to negotiate and being willing to pick your spots. You need both of those to be effective in this job, because otherwise you're just a blunt instrument.
Hey, thanks for listening. We'll be right back after a word from our sponsors. What does the future hold for business? Ask 9 experts and you'll get 10 answers. Bull market, bear market. Rates will rise, rates will fall. Can someone please just invent a crystal ball already? Until then, over 40,000 businesses have future-proofed their companies with NetSuite by Oracle, the #1 cloud ERP, bringing accounting, financial management, inventory, HR into one fluid platform. With one unified business management suite, there's one source of truth, giving you the visibility and control you need to make quick decisions. With real-time insights and forecasting, you're peering into the future with actionable data. Whether you're closing the books in days, not weeks, you're spending less time looking backwards and more time on what's next. If you listen to this podcast, you'll know I ask CFOs all the time to rep their tech stacks, and I would say almost every one of them use NetSuite. And that's what I would use too. Whether you're a company earning millions or even hundreds of millions, NetSuite helps you respond to immediate challenges and seize your biggest opportunities. Speaking of opportunity, download the CFO's Guide to AI and Machine Learning at netsuite.com/metrics. The guide is free to you. That is netsuite.com/metrics. Ooh, yeah, it's netsuite.com/metrics. Please, guys, I really need this. Let me tell you a banking story that starts in Tokyo and ends right here. MUFG. The M stands for Mitsubishi, the largest bank in Japan with nearly $3 trillion in assets globally. And they've assembled a purpose-built banking team to bring its global capabilities to the heart of the tech ecosystem. MUFG is a global powerhouse in many sectors and among the most active lenders to large US tech companies. They've gone big to support growth in middle market stage companies in North America and Europe. What I love most about these guys, though, is the team. Nearly 50 strong, smart, responsive, insightful, and possibly the most experienced mid-market tech lenders on the planet. Many of you know this because you've already worked with them. This is global sophistication meets operator-level understanding, a truly different approach. VC-backed, PE-backed, public companies, revenues from $40 million on up. We're talking about more than money. We're talking about momentum. Ready to transform your financial strategy? Email Group Head Bob Pulley at bblee@us.mufg.jp. That's bblee@us.mufg.jp. Tell him CJ sent you. MUFG, empowering a brighter future for the tech ecosystem. Ready to plan confidently, close faster, and report with accuracy? Here's what sets Planful apart. Imagine purpose-built solutions for every department, from FP&A to accounting, marketing to HR, all with built-in financial intelligence. It's easy to implement Planful in just weeks with minimal IT involvement, enabling seamless collaboration across your organization's key financial workflows. Best of all, Planful grows with you. Its unmatched scalability ensures that no matter how fast your business expands, Planful can keep up. See why over 1,500 customers worldwide choose Planful as their flexible, user-friendly, end-to-end financial performance management platform. Visit planful.com/metrics to see how you can elevate your team this year with Planful. They will hook you up. It is planful.com/metrics. Tell them your boy CJ sent you. Planful.com/metrics. And you can't do your job without data, which is actually shockingly hard to get at some companies, despite their success. And so you have to approach them and ask for like a starting point. So like, why do so many go-to-market teams struggle when like a firm comes like you and they ask for more data?
There's a lot of answers to that question, and I know we have like an hour and we can't get into all the different angles of that, but the way that I think about it is it starts as a mindset thing. Like, I think there are a lot of management teams and a lot of executives out there that if you really did a deep assessment on how they think about data, they are much more data aware than they are data driven. And when you're data aware, you kind of use data like a defense attorney uses evidence. It's only there to get you out of a jam. And when you're data driven, you're really focused on answering the same questions that you would be asking in any management team meeting, but like looking for the most numbers driven, honest answer possible to those questions. And you're a little bit afraid of what you might miss if you don't have an objective barometer on how the business is actually performing. And when you make that mindset shift, when you're willing to be a little bit more vulnerable and have this objective measure of how you're doing, how you're going to do, and how well you're doing it, you realize that you can't do that with your own five senses alone. So I think to start, it's a mindset shift that can be kind of scary for some teams. Part of our job is to make that shift less scary by, again, we started it at the beginning of the podcast, templates build trust. Yeah, it's annoying to fill out a report every week at first, but when you have a mutual agreement on the question that you're answering and the numbers you're going to use to answer it, it actually takes the static out of the room. And you know the kind of conversation that you're going to have, and you know the questions that are going to come up. So I think short term, it's you could think of it as extra work. I think long term, it's about making the conversation more predictable and consistent when it comes to what's going on inside of the business. I mean, you asked what else makes this hard. I think there's structural issues inside of most small software companies where maybe you haven't made the decisions on things like, hey guys, how many products do we actually have and do we sell? Are those things reflected in our system of record, in NetSuite, in our CRM, whatever it is? And when a new deal comes into the pipeline in my world of sales, are we capturing the data that we need to have that conversation later on? Most of the time, since you're so focused on growing the business in an organic way, it's very difficult to create that pause and kind of think of the exit that is coming 3 to 5 years from now and say, we know the answers to that pop quiz and we know the questions that we're going to get asked. How do we set up our data foundation so it's really easy with a handful of reports to answer those questions and to not have to do the Excel gymnastics out of the system of record to make sure that it makes sense? And then I think the third thing is like, this is a little bit private equity and venture capital. It's the investor's fault. And I think outside investors get a bad name when they raise the bar on people without giving them the resources they need to meet that new bar. And so if you're an investor and you show up and you throw a new reporting template at a management team and you don't explain why you're measuring the things that you want to measure, why these questions are important, how important it is to get common definitions of the KPIs that you're talking about, and by the way, like how this is going to help them run a better business, kind of shame on you because you just created more pressure without adding more support. And I think that happens a lot.
Paul, sometimes I'm like a dog who's chasing cars when he sees one go down the street. I just heard you say being data aware versus data driven. Can you unpack that one a bit more?
Yeah. So again, everybody knows the numbers are there, right? Like you spend a lot of money on your CRM, on your forecasting software, on your accounting implement, like whatever it is. But again, it's a mindset shift. Like how often and in what context are you going to look at those numbers? Is it just when your CEO or the chairman of the board asks you what's going on? Or are you in a rhythm where you go back to the numbers to honestly tell you what is going on inside the business? That is the difference between being data aware and data driven. And when you're data driven, you are in a rhythm. Like this is about an operating model thing. You are using that data to answer questions about how things are going and what you need to do next. And so I think a big part of my job is helping to get teams there to make that jump from being data aware to data driven. And the process is kind of always the same. And we can talk about what this looks like in more detail, but you start by co-creating your data diet. Like what are the questions that are actually important, both for us as investors and for you as a management team, and knitting those things together. And if we answered those questions, the test is, would that tell us if we're winning or we're losing? And if it tells us if we're winning or losing, then it's probably a pretty good question. So you start with the questions. And then it's about identifying the simplest, most reliable way to answer that question in a way that doesn't just rely on gut feel. And then it's about the cadence. So what is the cadence on which you're going to review those? Is it every week? Is it every month? Is it every quarter? And so there's a bit of an art of selection when it comes to KPIs of you want it to arrive on your desk often enough that it tells you what you need to know, but not so often that it becomes noise or it becomes burdensome with all the other stuff that you're trying to do in a given week.
Yeah, it's like the old adage of like, don't check your investment portfolio every day. You should probably check it like once a month or a couple times a quarter.
Yeah, it's hard not to hit refresh sometimes, but the cadence matters for sure.
To dig into something that you were saying there, it's pretty obvious too. Like if someone is, and I'm going to steal something from your Substack that I love, Hello Operator.
Please do.
Please check it out, guys. If the data was manufactured or if it was artisanal, I think you called it, like, is this something that's coming off the factory line at the end of each month? Or did you like all hustle into a conference room and pull this shit together into a spreadsheet last minute and be like, oh yeah, of course, here you go.
Yeah. Did you venture into the woods with a pickaxe looking for the data point that you're needing and come back?
I've done it before too. And that's why I'm laughing. Like I've had to do it before and it doesn't feel great. And then you're like, shit, I really hope they don't ask us for us to update this next quarter.
Yeah. And part of this is like, and we talk about this in our sales metrics playbook. So if people want to get behind the abstract conceptual stuff that I'm talking about and say, yeah, Paul, cool, but like what templates do you use? All of this stuff is out there on the internet for anybody to see if you Google the ParkerGale sales metrics playbook. Part of this is not only about answering the question with the right number, it's about making the getting of the data, to use a grammatically horrible but accurate statement, as repeatable and easy as possible. Like you should have a link to a report that just spits this out, that doesn't require a lot of manual manipulation or joining of data sets or late nights or increased heart rates. Like you need to make this easy and ideally automatic. And that's part of the art, is not just picking what you measure, but streamlining the process of going to get it. So it feels more like an industrial process versus an artisanal process.
And I think what people struggle with sometimes is like form fitting the right data for the audience. And it's like, is this an operational metric that we internally are going to track every day to run the business? Or is this a metric that we're going to use to show to investors for a fundraise, which is more of like not as often of an event? Or is this a metric that's kind of both of those and it's for our operating partners after they've made an investment? Like, well, which audience am I dealing with here? And am I giving them the right metrics for that data diet?
Yeah, and there's stuff that is probably going to be a little more important in an exit process that you have to have ready, that you should probably be looking at least once a quarter, but maybe don't hit the bar for something you review every week as a management team. Like the classic debate here is about sales rep attainment. How often does it make sense to look at sales rep attainment? And how often does it make sense to look at like what you should expect from a sales rep in their first quarter, second quarter, third quarter? I would argue, especially the latter version of that data point, that's not a weekly metric because there's a lot of noise in it. You don't hire sales reps every week unless something else horribly negative is going wrong or you're growing really fast. But yeah, there's an art here of like, okay, you know what questions are important. It's also about the cadence at which you consume those data points, and having them match each other is a key part of this process.
If someone isn't asking for help, what does that signal to you?
There's this quote that I like. It goes something like, a closed door only invites further scrutiny. And I think that's true when it comes to C-suite teams. Like if we're getting stiff-armed and if everything is perfectly okay, nothing is perfectly okay in any business, at any stage, at any growth rate, at any level of quality. Like, I firmly come from the view that like good strategy is taking advantage of problems and obstacles and things that aren't going that well. And so if someone can't articulate what those problems are, and if they're not open to sharing where the real challenges are, where the things that need to be fixed, I immediately think something's going on. But where I try to start versus jumping into being accusatory or thinking less of the person is I actually kind of turn the mirror on myself and I say, okay, what's probably going on is there's at least a little bit of this person being intimidated or afraid. And it's probably a signal that I've done something wrong as the operating partner. And it's probably a signal that I've jumped too soon into the work without spending enough time on the person. Like, relationship building is a huge part of this business. And ultimately, like, the really good stuff that we do with our companies is built on a foundation of mutual vulnerability, where I'm willing to say what I'm good at and not good at, what I know how to do and what I would have to play catch up on. And that's returned from me with the management team. But understanding how that person thinks, understanding what they've done so far, and ultimately getting to where the gaps are in the business, like, that is a vulnerable thing. And it's something that has to be built block by block. And if you come in and you meet someone for the first time and you're like, nice to meet you, we're the investors who just bought your company, can you tell me everything that you're doing wrong in your job day to day? That would be very helpful. It doesn't work like that. And you're not going to get a straightforward answer, because ultimately human beings are wired to protect ourselves, and we're wired to sense in-group versus out-group. And so you have to do the work to build trust with this person, sometimes by proving that you're useful and not just smart, which we could talk about the difference between those two words all day long too, but also proving that you care about that person and that you're there to make them successful, because ultimately that's what we're here to do, is to make our management team successful. But if you get off on a sour note and you put someone in a situation where they feel like they have to be defensive, then you're probably doing something wrong as the investor or the operating person.
And I've seen it from both sides of the table. And what I've found is, like, it's not best to go in there and just try to blind people with your science and be the smartest in the room and try to tell them like why they should listen to your advice. What does work though is if you try to figure out who their boss is or who they want to look good in front of, and find ways to make them look like an all-star. That builds trust, I think, really fast.
Yeah, and everyone's got a punch list of things they haven't had time to get to yet. So that's often how I'll frame it, is like, hey, what's on your punch list? Because here's what I typically see on that punch list, and how can I, without, showing up with a PowerPoint deck, or without showing up with a playbook, or without showing up with an assessment framework, which are all like pretty arrogant things to bring out in the first conversation, how can you just roll up your sleeves and get to work on that thing so they have one less thing on their punch list? Because if you do that, like, one, you're building trust. Two, you earn the right to ask more vulnerable questions and learn about the gaps in the business and learn about what's really going on. And three, like, you're building a relationship as you do that. So I think a lot about the difference between being smart and being useful in this job, especially early in an investment. And I try damn hard to be useful as early as possible so I can earn the right to come up with smart ideas.
Well, there's the smart, there's the useful, but then there's always the WTF, the strange of metrics and what you encounter. What's the strangest metric you've seen someone try to track or report?
I don't know if strange is the right word. Like, there's definitely some clarification that needs to happen, especially early. Like, a simple word like pipeline often means 3 or 4 different things when we first show up. And that's nobody's fault. It's just like, hey, let's pull apart the list of deals that have come our way, closed won and closed lost, and let's figure out the right buckets to think about those things in. And like the classic split is between, hey, new logo and upsell. And like the definitions for those things might actually be a little murky. It's not always totally clear. And so a lot of the work that we do before we get into reporting things is like squint at what the business is doing and the types of new customers that are coming our way and the types of new revenue opportunities that are coming our way, and just say, what is the framework that we're going to use to think about these things? And how are we going to talk about the products that we sell? And how are we talking about the qualified sales opportunity and type 1 versus type 2? And how do we talk about the corner cases where, a customer goes away for a month and then they come back? Is that a new booking? Is that something else? So a lot of it is just, it's definitional, and it's not really about the strangeness of the sales metric. It's more about like the lack of clarity and just getting to a really clear framework. So then when we say a number in a board meeting 3 to 6 months into an investment hold, we know what that number means. It doesn't require 20 minutes of debate to talk about the definition of the number because we've all agreed on what it is and what it isn't. And we can use it as a direct barometer to something that's going on in the business versus like a theoretical point to debate for 1/10 of a really valuable time with everybody in the room. I will say, like, I think I see more strange metrics in the marketing side of the house than I do on the sales side of the house. That's where I think there's more vanity metrics on the marketing side of the house than on the sales side of the house. We could talk for a long time about that, but be very careful if people are leading with engagement-based metrics because...
Oh, dude.
Those are often cherry-picked and not that useful.
I worked at a company. I remember every quarter we would report all-time vulnerabilities fixed. So not only was it a cumulative number, but it was like a number that like just had no basis. It was like, oh wow, there are that many stars in the sky, I guess.
I had a marketing agency one time send me a report every week that was a sum of the cumulative SEO rankings for the words that we showed up for. And I'm like, first of all, a higher ranking is a lower number. So you are actually giving yourself credit for lower performance on SEO.
This is like golf.
Totally. And like, that doesn't make any sense. And then I got into a very spirited debate with said agency on the call, and they attempted to explain why that framework made sense. And I'm like, based on the stance you're taking, you're telling me everything I need to know right now.
There's that. And then do you ever run in, I know we're talking about mostly sales stuff, but do you ever run into like a community adjusted EBITDA or funny stuff from founder led businesses? Like EBITDA less the 3 horses we own.
That's more of a question for our deal team. I'm mostly focused on just where are the customers, how do we bring them in, and how well are we doing in regards to that, which is, we could talk about what's actually on our data diet. But if I had one metric to predict what company's going to do well, it's new sales qualified pipeline created, and probably on a count basis. Because if I knew that and I knew what direction that number was trending, I kind of know who needs more TLC and who needs more gas to pour on the fire.
And you'd be surprised how hard it is sometimes at companies to figure out what's net new ARR versus what's expansion ARR.
Yeah. I mean, this is where the definitional thing, it's worth spending time on the definitions early and throw in some corner cases at your framework to figure out if it holds up. Because, your bookings trend might not be as good as you think it is if you haven't spent the time to define what actually is a new booking, what's new versus upsell, what happens when things get weird. We'll spend a lot of time on this too when I want my pipeline to be as believable as possible. And so one of the things that we do for pretty much every company is we will write out like these are the pipeline management rules, and we will frame it to salespeople as, look, just like, CJ, your sales compensation episode of this podcast, you talk about the split that you like. Pretty much every salesperson gets a base salary. And I like to point to that base salary and say, as part of that base salary, we expect you to do certain things. And one of the things that we expect you to do is abide by these pipeline management rules. And that's not to be a total robot on how you manage sales opportunities, but it is about like as things move through the funnel and as the data in the CRM reflects where it is in the funnel, this is what we want to see. And these are the biases that we want you to have. So that ties into things like close dates, like the amounts that you assign to new opportunities in the CRM. Like, how do you deal with something that the customer is saying might close by March 31st, but like you have a spidey sense that it's probably more like April? Do you err on the side of early surprises? Do you err on the side of most realistic? Like most sales teams never have this conversation about how to deal with the weird, big deals, fast moving deals, things that are hard to forecast. And they don't write down what they expect from people. And while that's not going to grow your ARR 3 times, it is going to take the static out of the room and make it easier for salespeople to know what it is they're expected to do. And ultimately, you're going to have a more believable pipeline figure, which allows you to forecast the business much more accurately.
And I think kind of a theme in the back of all this is the quality of people you hire, because they bring those practices and they have like a nose for like how believable is this pipeline. And you've worked with sales leaders of all different shapes and sizes, different backgrounds. What separates the best ones from the rest?
Yeah, there's no such thing as a universally great sales leader. And I think that sounds very obvious and woo-woo when I say it, but I think there's a lot of people starting searches with very expensive executive search firms with the opposite idea that like there is a universally great profile out there and we just need to find them. And I think the best sales leaders are good fits for the stage of the business that they are in. And businesses are in different stages depending on what they're trying to figure out. And the way that I see it, there's kind of 3 stages. So there's figure it out, there's fix it up, and there's scale it up. And the way I see it, businesses kind of go through spirals on their way up to bigger and bigger sizes. But like as a startup, you start out as a figure it out business. Like you don't actually have an ICP. You're figuring out what that is. You may just have a handful of customers that you're trying to replicate. You don't exactly know where this is going. There's lots of different paths that you could take. But the goal is to figure out like, okay, we're going to focus on this segment. Our sales process is going to look like this. This is how we're going to replicate it over time. This is how we're going to get the founder out of VP of sales mode. So a great sales leader in that figure it out stage where you're really solidifying like what the business is and who your ideal customer is kind of deal by deal is very different than if you have 50 reps and you're trying to get to 100 reps and like 2x the size of your go-to-market machine. And I think you'd be kind of dumb to use the same job description for a sales leader in that figure it out startup mode versus a scale it up, $50 million ARR business that is just trying to 2x its growth rate. So this idea of matching the profile of the sales leader to the stage and honestly asking yourself, are we in a figure it out stage, a fix it up stage where we need a reinvigoration of growth and a hard look at the way we've been doing things, or a scale it up stage where we're going to put a lot more investment behind the go-to-market machine and we want to make sure this person's a good steward of capital. Those are completely different jobs. And I think most searches go off track because they don't have a sense of where they are and they don't define the role vis-a-vis the stage they're in.
Paul, I'm going to make a statement and you can either agree or push back.
Bring it. Yeah.
And that's CEOs pick the wrong sales leader the majority of the time.
I mean, the stats would back you up, right? Like what's the average tenure of a chief revenue officer or sales?
Less than 18 months.
Yeah, less than 18 months. And so, I think it's a hard job to get right because ultimately, what are salespeople good at?
Selling themselves.
They're good at selling themselves. And so you need a process that acknowledges that that's part of doing the job well, but you need a process that gets behind that sparkle that good salespeople have, and that clarity of communication, which can dazzle you if you're not careful, and test for the things that really matter. And to me, the things that really matter are, one, like, are you a good fit for that stage? So do you know what it takes at that stage? And can you point to concrete evidence, ideally, that you've done that before? Like, I'm a big disciple of Dave Kellogg. He's been on a few of our boards. Half my job is just stealing from Dave, like, hand up.
Same here, honestly.
Yeah, exactly.
Shout out to Dave.
But he has this phrase, like, not on my dime. And he likes to hire people that are not going to learn how to do the job on his dime. Like, he wants someone who has done it, and ideally done it in a harder situation before you get here. And I think that's right. Like, if you are going to hire the person from Salesforce to be your VP of sales at your startup that has 3 customers, maybe that person's really smart and maybe they figure it out, but that is a dice roll. And you have to be willing to think of it as a low probability dice roll to make that hire. So, one, like, I'll hit it again, like, a good fit for the stage is the number one criteria. I think that person needs high standards and the means to detect if they are being met. And I say those in the same breath on purpose. There's lots of leaders with high standards that know what good looks like, that have worked at Oracle, they've worked at Salesforce, they've worked at, insert pedigreed sales stop here, but they're not close enough to the ground to detect if those standards are being met. And they're not used to core sampling what's actually going on inside the sales team so they know what to fix. So good sales leaders know what good looks like, but they also have a mechanism for sampling what's going on so they can fill the gap. So that's number one. I think good sales leaders are connected to the customer. So what I mean by that is, like, you don't guess how to sell this product. You actually go out to the market and discover how to sell this product by learning what your most successful good fit customers did to find you, choose you, get up to speed with you, and then just clone whatever that looks at. So I'm doing a project right now for one of our companies where we're just asking good fit customers in a series of interviews, what were you using before? When did you get fed up? How did you find us? Why did you pick us? And what's the number one thing that you can do now that you couldn't do before? And those are very simple questions, but you would be shocked what you learn, how different it is than what's in the pitch deck today, and, like, that you know exactly what to do after you go do that work. So I think good sales leaders kind of know, hey, I can sell, but I need the raw ingredients that comes from knowing what's true about our best customers to be able to sell most effectively. And they do the work to go do that. And then I was having a debate with a couple of friends that have my job at different funds the other day. And we started talking about this idea of followership. And it isn't something that I had on my report card before that conversation, but I've been thinking a lot about it since we talked about it. And I think it's really important. Like, if you're a sales leader, part of your job in some magnitude is going to be to build a team. And the way to fast track that team is to have talented people that want to go do it again with you. And I would never select someone that just has followership, that doesn't have the other qualities. But I think it's a very good sign of character. And I think it is a potential accelerant when sales leaders have strong followership. So I will ask people, hey, when you start here, what is the list of people that, I'm not saying we're going to go get them right away, but who would you love to have come with you? And if people struggle to come up with that list, you know something. And if people have 20 people off the top of their head, you know something else. And it's becoming a bigger and bigger part of our report card and assessment process. It'll never be the number one thing, but when you check all the other boxes and you have good followership, it makes a big difference.
How much of it do you think is having the right playbook? Because I used to think that the playbook was, like, the most important thing. Like, oh, we're a PLG security company, we should hire someone who's seen the exact same thing. But then I'm over the last couple of years, I've actually started to push back on myself, thinking that, like, every company does have unique quirks, and you can't really just hammer the same exact, fullback right up the middle play at a different company, and it's 100% going to work.
Well, as a Michigan football fan, Big Ten guy, like, I always appreciate the power running scheme. So, good metaphor.
I love a good fullback dive. Yeah.
Amen, man. Amen. Shout out to Mike Allstott and every other
legend.
Legend. Yeah. So the idea of the playbook, if people want to hear our take on the private equity playbook, they should Google, I think, Getting Real About Value Creation. So Jim Milbury, who's the other operating partner in our team, we talk about that idea, like the private equity playbook, and we talk about what it looks like inside our fund. And I think the takeaway from that conversation is it depends, right? There's no playbook that is universally portable from one company to the other. And I think it's important to think about the elements of the playbook and how much translation they require company to company. So let me say what that means. Like, I think how you find pipeline and the way that you go acquire qualified sales opportunities is highly variable company to company. And so even if someone has done the PLG thing, like Canva's PLG motion is totally different than, we're on Riverside right now, Riverside's PLG motion. And at a very high level, if you step back 100 yards, yeah, PLG is you use signals from people using the product to figure out how you can sell them more stuff. But the way that shows up and the behaviors you need your sales team, especially, to go and do are wildly different. And like two PLG motions might actually be more different than like an inbound versus outbound motion in some cases, right? So I think the thing to keep in mind is how you find pipeline, highly variable company to company. And I would dig into like what their beliefs are about how that would work, but also how it would translate. Like if the Riverside crew was hiring a new VP of sales and they were coming from Canva, I would ask a 2-part interview question in that interview that would be, I want you to lay out your beliefs on what a good PLG sales motion looked like and what that looked like for you at Canva. And then I would pay the person the service of describing for 5 minutes what our PLG motion looks like. And I would ask them like, okay, tell me about the qualities from your previous stop that you would immediately bring over here and not think too much about translating. But tell me about like what you would leave behind and what you would have to figure out over here. And if they can't do that dance, like the selection exercise, like I'm going to bring this from the buffet, but I'm going to cook a new dish over here because you've just introduced some new constraints, I think that's a red flag. So people that say I'm going to bring the playbook from my old job and just run it again, like I get immediately skeptical. And I think a mark of intellectual horsepower is being able to do that translation exercise and very quickly pick up on the unique qualities of the new company and talk about what's different. So what's less variable playbook to playbook? I think how you run a tight sales process is way less variable. Like there are things you can do to interrogate a pipeline at early and later stages. And most of it comes down to good qualification and good discovery. Like if you don't know how this deal is going to move through that organization without you in the room, and you don't know how to make sure a rep is asking the right questions so that you can figure out what's truly qualified and not, and what the need is behind the need, like that kind of all tastes like chicken from company to company. And whether you're a band person or a medic person or a spin person, like the basic fundamentals there are very similar. And then I think how you like consume the data and talk about the business might even be less variable than that. So, speaking from experience, we use the same weekly sales metrics templates for all of our businesses, and we'll put in wrinkles mostly because the management team requests them. But we look at the same thing for every single company. We look at weekly pipeline snapshots. We look at weekly new opportunity creation. We look at an opportunity hot sheet. So I know what I want to celebrate when we close a big deal and I know the name of the opportunity. We look at the same marketing sheet, and that is relatively high level. But when you're trying to keep tabs on an entire portfolio of businesses, like you need consistency and you need templates. And speaking from a management team relationship, like templates do build trust. When you know the data you're going to show, you know what it's going to look like, and you know the things to look for, it's a less scary conversation and a less intimidating conversation. And that leads to a better conversation.
Dave Kellogg and I talked about that on the pod at length of how templatizing your board slides reduces cognitive load.
100%.
People talk about templates like it's this dirty word. It's like, no, you're actually helping them out because like they have a mental framework of like, okay, I remember that from last time and here's what's changed.
Yeah. And you start to, you don't have as many debates about what the number is. You start using it as a way to talk about the business, just in a slightly different language. The management team doesn't spend the week before the board meeting freaking out about what the investors want to see, because the investors have had good manners and told them what they want to see, and they've created the template, ideally, that they want to see, and they've said, this is it. And you can focus on good questions, and you can focus on like drawing little red boxes around the templates that you've all seen 20 times and say, we're going to focus here because this is either exciting or discouraging or just something that we need to keep an eye on. And that's when it starts to get fun, because you're not solving the problem of putting together a good board deck. You are having a better conversation about what's going well and what needs fixing next. And ultimately, I think our best performing companies are also the best at having that conversation, the open conversation about, here's the challenge, here's the opportunity. Now help us figure out the best plan of attack for both of those things.
Well, Paul, speaking of having a conversation, you have this quote, you can't fix a secret. What does that mean?
Like, back to my idea of strategy. Like, strategy is taking advantage of challenges and opportunities. Full stop. That's what it is. And the big strategy consulting firms, of which I worked for one for a long time, would love for you to think that it's more complicated than that, because that justifies the price they charge you for a strategy project. But that's what it is. It's figuring out what the challenges are, what the opportunities are. And challenges are kind of hard to talk about, especially if the challenge is in your zip code of the business. Like, if your win rate's going down as a sales leader, if your leads are trending down as a marketing leader, if you actually screwed something up as a CFO and you don't have as much cash as you thought you would, like, that can reflect badly on you. And it can be hard to bring that out in the open and say, hey, we need a plan to address this because I created a little bit of a problem. But if you're not willing to talk about it, it never gets fixed. And it always gets worse over time. So we try to create an environment and a conversation, partially through templates and partly just the way that we work with our management teams of, we don't like secrets. Like, we like problems because problems are fixable. Secrets are not fixable. And so bringing something out in the open and debating it and coming with a plan for what you're going to do to address it before it turns into a big problem is a good thing. Keeping something in the dark and not telling your investors about it until it's something we can't fix, that's not a good thing.
Cadence feels like it's everything to build that trust. You got weekly, you got monthly, you got quarterly metrics. When it comes to reviewing performance for you, like at the portfolio level, what's the most common mistake in getting that cadence right?
In sales and marketing, I think it's falling victim to the pipeline soap opera and just having the conversation.
I know what you're talking about.
Yeah, it's having the conversation being about this deal and this character and that character. And like Jim said, we'd be in procurement, but now procurement's being mean to us. And like, it reads very much like a reality TV show instead of a probabilistic conversation about where we expect to land. And so there is a place for that. Like, winning deals involves figuring out strategies on how to talk to people and get them to do what you want to do. But this is why I think separating conversations about the pipeline from how to win individual deals is so important, because people like talking about people more than they like talking about numbers.
Yeah, you ask for the probability, and then it's like, well, Dale in procurement, I mean, he's been on a 2-week vacation.
Freaking Dale, man. Dale's
it's always a Dale, too.
Yeah, I think it's mostly about getting out of the mode of the big deal for the quarter and where are we and what conversation just happened. And it's answering all the questions that you're already asking as a management team. Every management team is asking the same questions. Where do we expect to land for this quarter? Are we creating enough pipeline? Which deals matter the most? How's the team doing? What's marketing got coming up? How's marketing? Like, every team is asking some version of those questions. The difference is the data-driven teams know that it's important to supplement their instincts and their answers to those questions with numbers that are a little more honest than any of our 5 senses are, right? So the conversation about how do we expect to land this quarter is less about how we feel and less about that one big deal. And it's more about a numerical representation of pipeline coverage and how that stacks up versus historical, And it doesn't mean you can't talk about the soap opera, because half the fun of coming to work is being part of the soap opera. But what it is, it's about supplementing your instincts with numbers so that you can have higher conviction about what's happening and what needs to happen next.
Paul, maybe gearing towards a close here, can you give us a temperature check on what good quota attainment looks like these days?
I think you've got a better handle on that than I do, to be honest. Like, you're more in the rep view data than I am. The thing that we look for is my rule of thumb is 80% of reps hitting 80% of quota or better. And in cases where we are hiring new reps, I want to see that the new ones are hitting stride in a way that's predictable, repeatable, and positive, right? So keep in mind, our businesses are pretty small. So most of our sales teams, at least when we start, are somewhere in the neighborhood of 5 to 10 quota carrying reps, which may include some account management people. It may not. So it's fairly easy to keep tabs on who these people are, how they're performing, how they're ramping, kind of who our horses are that we need to ride, who needs a little bit of extra TLC or coaching. The magic for us is like actually looking at the data and putting it in a template that is easy to interpret, and keeping an eye on things like, well, Joe has been here since 2011 and Amanda just got here last year, and not looking at ramp and quota attainment absent of tenure in the role, right? And this gets back to exit readiness, because spoiler, one of the questions you're going to get if you're an investor or a management team is, who are your salespeople? What has quota attainment looked like over time, quarter over quarter? When did everybody get here? And they might not ask you for this, but all the investors are going to back into what is a predictable forecast of like what you should expect when you add a rep. So you can start to do unit economics math around like, how that works and all that. So the important thing again is to have like the data foundation where you can pull that without losing your rev ops person for a week in a spreadsheet, and then looking at it every month and saying, what does the team need to improve this by 5 percentage points? And in our world, a lot of that is training. A lot of it's sales enablement. Sometimes it's better pipeline inspection. Sometimes it's the management team spending more time listening to gong calls and just correcting the obvious stuff. But in situations where I'm trying to figure out, is quota attainment a problem or not, my finger in the wind rule of thumb is 80% of the team hitting 80% of their quota or not? And if not, then it's time for a double click into why that is.
That's a great rule of thumb. You had a funny line that most reps are handed a phone and a machete and told to go sell.
Yeah, I think Dave's got a thing where the average Disney World parking lot attendant gets more training than the average enterprise sales rep. And I think that's true. I think it's mathematically true, which is a little scary, because the parking lot attendant isn't shepherding 7-figure deals through the pipeline that makes a big difference to your cash this year, right?
He might need to know how to drive stick though, and I don't know.
He might, so. Yeah, that's different. There's probably a demo joke to be made with knowing how to drive a stick, but we'll leave that for another episode. Yeah, I mean, I go back to my experience. I mean, I was hired as the first BDR before they called BDRs at a data company in New York City in 2009. And if you remember what was happening in 2009 in that market, like, it wasn't the best time to be cold calling into hedge fund guys when the red bar on CNBC was perpetually there talking about the downfall of investment banks and the downfall of the economic world. But my first day on that job, I was handed a phone and I got a Post-it note of a guy's name and a number. I said, go call this guy. And I didn't know what we sold. I didn't know how it worked. I didn't know what my customer cared about. I didn't know what to say. And I certainly didn't have any confidence, because the rest of the sales team in my very small bullpen room was, pretending not to listen to me and waiting for me to fail on that first call. And I think that experience is way too common. And it's funny because salespeople take a certain amount of pride in it. Like, we escaped the jungle with just the phone and the machete. But if you're a CRO or a CEO, I think you need to be very paranoid about the level of support and the level of consistency and the level of training and the level of practice that you give your sales team. Because in a lot of organizations, it's nothing. And people figure it out on their own. And that's cool. It's like a character building exercise. It's not a pipeline building exercise.
It is. Yeah, but I think your budget isn't as reliable though if you're just relying on hero selling.
Totally not. And it can be as simple to start as like making time for the team to share what's working with each other. Like a lot of our early sales training is simply having a point of view on who the best people in the sales team are at certain stages of the sales process and having them share what's working and making that a little more portable across the team. Like that to me is a V1 sales playbook, is just go look for what's working and have the people that know how to do it teach each other. And then it's about codifying it and making it better over time. But I think if most CROs out there and most CEOs were honest with themselves, there's either zero or not enough sales training and practice going on. And that's a big lever to pull.
Paul, how real is the urge to promote the best individual sales rep to people manager?
I've gotten way over that.
You have?
The urge is very real inside of most organizations. I fight that pretty hard in most cases, unless the person has raised their hand and said, this is something I really want to do. And we can set up some kind of mentorship situation where they talk to me, they talk to other people in the portfolio for two reasons. Like one, like, yeah, we want to get a sense of if that person has what it takes, but you don't know what that job is until you do it, right? And so a lot of people get thrown into that management pool for the first time, and they realize it's very different than what they thought it was, and it's not as fun, and they feel a little insecure because they realize they don't have the skills to be immediately effective in it, and it feels a lot harder than it felt closing deals. I think there's more of a choice than ever now, which is cool for salespeople if they want to be big time whale hunting enterprise sellers and stay on that individual contributor track, and having that be like a noble and rewarding and energizing track. Management is not the only path, right? And, you know, there's guys out there writing about this, like Jamal Reiner, who was, I think he was an Oracle rep for a long time, wrote a book called Mega Deal Secrets. I'm very encouraged by the fact that there's a lot more content out there, like evangelizing that path and talking about what a really rewarding, both personally and economically, path could look like staying on the quota carrying path. In general, I think it's a mistake to put your best rep, at least right away, into a leadership role. And I think the best thing you can do for them and for the business is help them understand what that job actually is before you make that move. And I think a lot of people skip that step.
And the dirty secret that most people don't know, but every software company I've ever been at, the highest paid person at the end of the year was the best individual sales rep. Not even like the sales manager.
Yeah, and that's the way it should be at a high performing software company, because there should be a big deal out there that person wrestles to the ground, and they should be rewarded for it. And that person probably should make more than your sales leader. Not going to happen every year, but when it happens, it should.
I've seen a lot of $1 million W-2s for individual reps, and it's a cool advertisement in the company, because they all talk, and then they're like, shit, I want to do that too.
Yeah, you should check out Jamal's stuff, because that's what he talks about. It's like, how do you go from being an AE to somebody who does that, and what does it look like, not only from a career path standpoint, but to ride the wave of a big deal like that, and what are the best practices for doing so? Because the rules of normal $100,000 ASP sales process don't always apply.
We had a rep, I'll call him Bob, who closed so many $1 million deals at this company that the BDRs all worshipped him in the bullpen, and they made like a statue, an ode to him out of like Zinn cans, because he had closed so many $1 million deals.
Every place is different, man. Every place is different.
Paul, this has been a blast. We're going to make you a friend of the pod. We want to have you back to talk about building good budgets at some point. But
love that.
I hope you had fun. This was great.
Yeah, thanks for having me. And if people like this stuff, I write probably way too much about it. I mean, Hello Operator on Substack is where I write about what works for us inside the portfolio, what it's like to be an operating partner, and what you can use if you're in a role, whether it's leading revenue or leading something else.
Hello Operator is an awesome playbook. Thanks for writing it.
Thanks, man. Appreciate that.
Run the Numbers is a mostly LLC production. Yelling an intro by Fat Joe. Artwork by some AI thingamajig. podcast and video editing is done by Cleancast at cleancast.io. Nothing said on this podcast is intended to be business or investment advice. It's the sole opinion of me, a guy who feeds his dog too much ice cream and has a history of net operating losses, LOL. If you like this podcast, please hit subscribe. It would mean a lot to me. And also check out mostlymetrics.com. That's my newsletter where I explore business models and financial metrics. Thanks for riding with me. Share this with your friends. Peace.